That's
I didn't know if we were the same. Okay.
Yeah, let's get a read on. Let's get a read on the markets and the economy right now from Gemma Godfrey at Credo Capital. I asked Gemma, and I want your opinion on it. Let's say that Berlusconi is gone. Does that immediately solve the problems? I mean, the bonds do go up. The yield comes down on the 10-year when it looks like he's leaving. Would that fix things if you put a Mario Monti in there? Because Italy is we're all keying off that at this point.
And the situation in Italy is unsustainable, as you said, with yields, reaching 6.7%, which is obviously the level at which Greece, Ireland, and Portugal sought their own bailouts. And obviously, as you said, a lot of this uncertainty is surrounding whether Berlusconi is going to stay or not, because he does seem to be in a bit of a state of denial. I mean, he came out and said that Italy doesn't feel the crisis because restaurants are full, and he is. I mean, there's a lot of controversy, but he is losing majority, which means if you get a vote of no confidence and he exits, that may bring some calm to the market. However, as we've said, that these austerity measures still haven't come through, and there still might be an issue over whether Italy will be able to grow out of this crisis. And with a debt market which is 6 times the size of Greece, it's the equivalent to Greece, Ireland, Portugal and Spain all put together. Yeah, markets are very concerned.
Yeah, all the headlines now say the Europeans trying to rescue the rescue. Does it need rescuing?
Well, I mean, there's a lot of uncertainty over the rescue fund itself, and actually it might pose part of the problem as opposed to the solution, because there was a €3 billion debt auction last week that actually had to get postponed because the demand wasn't there. China is obviously being looked to be able to provide part of the demand, and they're staying out of it. The thinking will be, if the EU can't decide how to rescue themselves, how are they going to be able to help?
Joe, did you hear what the Chinese said yesterday? The guy from the Chinese investment, the Sovereign Wealth Fund, he said he was on Al Jazeera. He was explaining why he didn't invest in Europe, and he said that their incentive system and their labor system induced sloth, indolence.
This is fantastic.
Indolence. They have a whacked-out incentive system and a totally failed welfare state. I mean, it was so brusque.
Let me get it for you. That was actually remarkable.
Yeah, so the Chinese aren't helping out, is your point, Gemma?
The Chinese aren't helping out. Lagarde came out and said that the IMF lends to countries, not entities. Draghi came out and said that the ECB's purchases of European bonds is limited. And so it's, where are we going to get this demand from? And regular investors are also, saying that the situation's too opaque and there's too many risks to the downside. And if this continues, where are they going to be able to scale up the rescue fund? And if they can't, then that again puts all eyes back on Italy. How are they going to be able to bail out any? Is all
your money in the mattress? I mean, it sounds so bleak.
Things do sound bleak. I mean, there are always opportunities that come from this because markets do tend to overreact, and the best time to be able to profit and make money is when markets overreact. And if things sell off, you can still go in and pick up some quality in certain places. It's getting tougher, but by differentiating, there should still be quite good opportunities.
All right, very good, Gemma. Thank you. We appreciate it. Check back in with you maybe next week. I'm sure we'll have plenty to talk about. Yeah,
we got to get the soundbite for you from the Chinese investment.
I literally was picking it up on the screen.
We ran it yesterday. We should run it again.
Oh, really?